Hi, it's John Kelly. In this module, we are going to discuss related party transactions. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, for related party transactions, we are to consider this in planning, and I guess that's no different from any other component in the financial statements. And the planning discussions are supposed to include a discussion of related party transactions. And remember, it's a discussion, not a meeting. And remember that not everyone has to be there. It could be only the partner, though if it was only the partner would advise others as needed about anything identified with respect to related party transactions. And we are also to consider the risk of material misstatement of fraud and error in related party transactions as we would for any other component of the audit. Very important then that we document that this was done as we would document it for considering the risk of material misstatement of every component. And the other thing is, if we do identify something with respect to related party transactions, I'm very much opposed to randomly documenting risk of material misstatement factors all over the audit file, because we're at risk of forgetting it, overlooking it when we design audit programs. Second thing is 330 and 315 have requirements for linkage of work done to risks assessed and vice versa. So much better that it all be documented in one place, and then we make sure that after we have documented it, that we satisfy the requirements of 315 and 330. So it's very important, I think, to do it all in one place. At least that's my preference. We are to ask management about controls as we would ask them about controls over most everything. In larger organizations, they will probably have specific sets of internal controls to deal with related party transactions, and we would then document those controls to the extent that we considered necessary. If it's a smaller organization, controls are probably going to be less formal. No documented processes, that's very likely. However, the owner-manager involvement through active involvement may mitigate risks or increase risks. So we have to decide which of those two circumstances it is. And if owner-manager's active involvement reduces the risk of material misstatement with respect to related parties, then that's good. And that's a suggestion in 550-820. We are to document the risk of material misstatement as again we would for any component. And if we identify items that are outside the normal course of business, they are, of course, by definition, significant. Similarly, if we would identify fraud risk factors with respect to related party transactions, they are also significant. And as we would do anytime we identified a significant risk of material misstatement, we would perform additional procedures, and there are suggestions in paragraphs 21 through 24 of what those might be. And we would ask management. We would ask about the identity of parties and any changes. We would ask about the nature of relationships and the type and purpose of transactions. Now, in a simple organization, and of course in a very simple organization, there might be no related party transactions, but in a smaller organization that does have related party transactions, it's likely that all of that is disclosed in last year's financial statements. So asking management can be a relatively simple exercise. Is this all the same as it was last year? And we are to remain alert, particularly for matters on confirmations, if we've sent any out. Matters disclosed in the minutes, another section where it's important to read the minutes and look for interesting stuff that relates to the financial statements, and any other documents inspected. And therefore, it's important that you document that you did those three things, that you considered those three things with respect to related party transactions. And a checklist step could remind you to document that you did that. And if, as a result of being alert, we did identify matters that are outside the normal course of business, we would ask management about it, and we would document what we found and what additional procedures, if any, we thought were necessary. We would share related party information with others on the team as needed, not necessarily everyone, but as needed. And again, because this is a requirement, important to document that this was done. And again, a checklist could remind us to say, and I shared the information as needed with other members of the team. We are to document the names and natures of relationships, and again, this should be in the financial statements if it's simple. And if it is more complex than is disclosed in the financial statements, then we should have additional documentation. We should evaluate the disclosures and document that we have done that. And we should get a rep letter. There's a standard paragraph in most rep letters saying, we told the auditor everything they needed, and it's been accounted for and disclosed correctly. And so that is the response to all the inquiries we have made of management. And of course, if you found something interesting and needed additional representations, you would get those as well. And you are to tell the board if there are significant matters with respect to related party transactions. So if you have identified that as high risk, significant risk, remember to let the board know. So in summary, asking management is really important. It's indeed the key procedure we have in this section. And we are to remain alert, as auditors always should. And therefore, documentation is very, very important, that we document that we asked management, and in particular, document the representations we got, which will be in the representation letter. So, thanks for listening.